Welcome to Stock Odds and End podcast. Getting ready for the week ahead. Good evening, Rob. How's everything?
Well, we've got it on a Sunday again. We tried so hard for so long to do Saturdays and get the word out to everybody ahead of time, but life gets in the way and a busy season. So here we are. But appreciate you jumping on with me today, and let's see what we got to go through here. So looking first at where we've come from here and where we're sitting on the SPY, you can see that we did have a daily gap back in the middle of November, and we haven't even made an attempt to fill that. So that might come sometime way in the future. We always say that, at some point in time, gaps get filled. We almost say it this way: all gaps get filled, but it doesn't mean they have to be filled right away. So this gapped and has continued to sort of grind higher. Markets have had that ambition to put in a new high for the year, and they certainly are doing that. So let's look at the Qs. Qs had already spiked a bit earlier and pulled back, and then starting to move again. So we saw Thursday and Friday, we saw a little bit more mega caps kicking back in. And the diamonds there had a really brief burst of super strength compared to the other indices. And then they've kind of stabilized and moved sideways now. But still a good showing from the Dow ETF there. And IWM, it's been quite volatile, and got a little bit of gain out of it on Friday there. But for the week, still sideways to a large extent. Sector performances for Friday and for the week. On Friday, we saw energy. Isn't that funny? Like, it seems every so often you get that one day, and it's often on a Friday, where all of a sudden energy decides to pop up. It could be the weekend effect, right? Like, expecting, suddenly a more serious hot war to break out or something. All of a sudden energy just peaks its head up on a Friday. But technology was number 2, financials number 3. And the consumer defensive was down at the bottom. But for the week here, communication services did the best. That was pretty much from Google when they announced their Gemini AI thing. It really popped it up, and
It's
it
like
helped.
a 5% pop.
Yeah, exactly. So that boosted communication services for the week, and Meta, finished up okay as well. So technology came in second, and energy was down the most for the week, pretty significantly. And basic materials, just because the U.S. dollar strengthened a little bit, and that put some pressure on basic materials. And gold, you saw that fall off. We'll take a look at that chart a little bit later here. And consumer defensive as well. So really, largely a risk-on week, as it has been pretty much all year, a risk-on year. If you analyze even the performance of our risk-on versus risk-off lists, the risk-on lists have generally been doing a lot better than the risk-off list. Not every week, of course. Sometimes you get it, when markets roll over a little bit, the defensive list pops up and outperforms the risk on. But for the year so far, risk on has dominated. Market and sector ETFs performance. Here you go for the week. You can see, the sector ETFs, XLY hanging in there pretty good. XLK not too bad. XLC as well. And basic materials, the one that was, down quite a bit, along with energy and defensive. What I noticed is the relative volumes also have dropped off. So not sure why this week? I mean, it still should be a lot of people on deck, even institutions. We're not quite to the holidays yet, but just was a really apathetic week. Not a lot of commitment or participation or catalysts. Maybe there's a wait and see for this week with FOMC upcoming. Maybe volumes will stay relatively light again until we get past that. So, you would expect them to drop off like this, closer to Christmas or between Christmas and New Year's, but already lighter volume on these ETFs. Not to mention some of the stocks volumes is disappearing too quite a bit. So keep that in mind. Map of the market for the week. You can see that the week before NVIDIA did have a bit of a pullback and managed to do okay this week. AMD really on fire, even though the fundamentals are a bit pricier for AMD than some of its peers. It seems to be probably the gaming thing, the Christmas sales that we talked about before. This time of year, just AMD gets that typical boost. And Apple doing okay as well. Google, Meta, Tesla. We had really good showing in the travel services. You saw NCLH on fire there one or two of the days, and RCL and CCL didn't move as much, but still up. Booking.com, Airbnb all doing well. In apparel, Lululemon bouncing around, doing some yoga. And the home builders as well. And of course, the home improvement and stuff is dragged along with that. But home builders were doing really well. Boeing had a pretty good week as well. So there you go on the map of the market for the week. By the way, some traders create their own maps that they follow. So they compile something that's really important to the type of strategies they do. So they use a custom map and, leave that to your imagination of what you want to do, what you want to track, what kind of information you want to know. But again, it's centered around sort of these relative performances and relationships that, your strategies are based around. So, play around with that. Make a custom map for yourself to track every day. Okay. Seasonality for December. So we showed this last week as well, that typically we have this soft spot mid-month, and especially going into the third Friday. So mid-month starts on the 13th, which is the same day as the FOMC announcement. So that starts on the 13th. So largely, this is either going to be as advertised, and we'll do the same thing again this season, or the FOMC will, give us an alternative outcome to this. So we do have a macro situation that could override seasonality very easily, or it could agree with it. And perhaps, some elements of the December meetings that we've had in history are, contributing to what we see here. Okay, so we go into the third Friday, and we're a long ways away from the last 5 trading days of the month, so we'll talk about that at another time. But we're really concerned this week about how this plays out with all the macro news and the seasonality. So here's the mid-month seasonality for ETFs. And I had to really drop this volume slider down to get anything to really show up on this side. So positive values by change, not a whole lot to go on. And in fact, SDS is the inverse. SSO is the 2x for the SPY. And SDS is the inverse 2x. So, if it's bullish, that means things are selling off. So that's what you're getting here. Same thing with SH, the 1x inverse, the SPY. Gold, that would be, maybe able to bounce back a little bit. But again, this starts on the 13th, so could it be running ahead of time? Possibly. And over here we see XLE pulling back. We have had many Decembers where energy does have weakness. Often in terms of seasonality, it's usually stronger in the months ahead, and then you get into December and January and it starts to pull back. But we've really had a bad session for oil since July, so it's been one of those interesting years for energy, as if we don't need it anymore, it seems. Retail, retailers, they can often run, up to Black Friday, maybe slightly after that, and then they start to pull back, even though you're going into still shopping season to some degree, but they find some weakness there, so keep that in mind. Basic materials, if the US dollar stays a bit stronger, that should still stay under pressure. Here's the stocks. Anything pop out at you there, Dave, on the stock side?
Well, the solar stocks were showing up on the other one too with ETFs, the TAN, the TN, right. And you got the top stock there is a solar stock, and you got First Solar. So that's kind of strange, but it is still a really risk-off kind of theme there.
Mm-hmm. Yeah, I mean, you got AMD still over here, NVIDIA on this side. So semiconductors still might be seasonally strong. On this side, you've got some like MRO and Devon, and got some Hess, some oil stuff, steel. So it looks like basic materials, energy, even some industrials over on this side. But I mean, you can't ignore the 87% negative values by percent change versus 13. So you get the sentiment, you get the seasonality, you get the history, and we could, again, be in keeping with that. There's Las Vegas Sands in here. If, we've had a pretty good run for some of the hospitality and travel and all that. So I'd look for anything on this list that has had a pretty good move up, and that might be where the edge comes in. Not so much trying to chase beaten down stuff already like some of the energies. And there's the third Friday for ETF. So we're going to move into expiration on Friday. And is there similar theme? There is some of the same ones showing up for Friday as well. So it looks like some agreement there, but a little less bearish. We see
the ARK funds
coming in. Yeah, exactly. But you're still seeing SDS, which is the inverse again, and SH bullish. You're seeing silver and gold, so their TAN is still there, but not as strong. But again, remember that the mid-month covers from the 13th through into the following week as well. So it's the 9th through 14th business day of the month. All right, third Friday for stocks. Got CH, McKesson. There's Tesla showing up. Still solar. JD. Ross Stores. On this side, you got Oracle. You still got GM showing up on this side. Ford. Devon still showing here. Schlumberger. So, I mean, not too much arguing between mid-month seasonality and the third Friday or expiration. Okay, seems to be some overlap there. So that should give you some comfort. If the thing is actually, progressing for a softer week, then this probably will play out pretty accurately. Okay, so this evening, what do we see? Bitcoin all of a sudden had a bit of a flash crash there. How much was it down there, Dave?
like 7.5% at one point, and then it seems to settle in about -4%.
Yeah, so it really took a plunge. So something spooking it maybe about the Fed meeting this week, or I don't know. But keep that in mind. This is the US dollar here, which had strengthened above that 200 MA. And that's kind of this 5-day sort of elevation move here is what puts some pressure on basic materials. Also puts a little bit of pressure on oil just because it's priced in dollars. 10-year, we saw a pretty big drop on Friday. Did you notice that, Dave?
Mm-hmm.
I mean, we had a bullish Friday. Things were moving up, but we had it also kind of like move up in the morning and then pull back again, and then finally, grind up again. And so it was acting kind of strange, even though the market was giving it pretty good move there. So it was just this 10-year note dropping here means that something is kind of leaking out about some concern about rates, right? And we've come a long way off the bottom, and we plowed right into that 200-day MA, almost bang on, and then pulled back a bit from it. So as the 10-year note moved down, right?
The rates went up.
And as the note moved higher, rates went down, and then we dropped. So the market doesn't usually like to see it, but it held up okay. Crude oil had that little couple-day move there, and it doesn't always translate into how well the energy stocks do. Again, for the week, they were down badly, but for the Friday there, they did pop up a bit. We're not too far from the support level for the year, right? So when people probably thought, with all the unrest in the Middle East and stuff going on, that we would be much higher. Here's the VIX, still declining. We're below 15, which was kind of one of our thresholds, and we're at 13.3 on the VIX. So this would probably have to pop up a little bit if we're going to have a down week. I don't know how much portfolio insurance institutions will take, but normally if there's more risk, this should climb a little bit. There's your gold. A big spike up into that 2150 and then pulled all the way back down to our original resistance level that we had here for a few months and sitting just there. So some of this is related to the dollar. A lot of it was just related to some speculation. And what else can you think of is going on here? Anything, Dave?
I mean, it's such a sharp peak up and back down.
I know. Oh well. Economic reports. What do we have here this week, Dave?
Yeah, there's a couple themes: inflation data and Fed speak. So Tuesday we have the core CPI report. That's inflation data excluding food and energy. And then Wednesday we have the core PPI. But the main event is Wednesday at 2 p.m. the FOMC interest rate decision. Right afterwards, there's the Fed Chair Powell press conference. So that's the key event for this week, and it's on Wednesday. And then Thursday, there's some retail sales data, and then Friday, some manufacturing data as well. But that Wednesday is going to dictate how I think the rest of the week's going to go.
Right. And normally what we say is that ahead of most FOMC meetings, like we usually get an okay Monday, even into Tuesday, a bit elevated. In the morning, sometimes even half an hour before the announcement, we get a bit of a run. So that's typical. Now, again, it depends on what else sort of leads into this one. But I've seen this bullish nature of the market even when we've been expecting a rate hike, right? Because I don't know, they always expect at some point, even if there's going to be a hike, well, the language could be more dovish, after this. So we're going to lean into that, and we're still going to be hopeful. So that's what typically happens. So contrast that with what we just went over with seasonality in terms of, mid-month seasonality being weaker. But again, that starts on Wednesday. So we could have a couple good days. We could have even a pop-up if there's no interest rate hike. But something may come out in the testimony or, in the forward-looking, anything like that, the dot plot, they call it. Anything could come out that suddenly changes things to where we're concerned. What could we be concerned about? Well, let's roll over to China's falling on weaker than expected CPI data. So it was their inflation data, which actually signaled consumer prices are declining very rapidly. And so that's deflationary, and the market's selling off. Remember a couple times in the past, Dave, I said it wouldn't surprise me at all someday in the future where we suddenly go from inflation to deflation very rapidly. Do you remember me saying that?
Yeah.
Yeah, I don't know when that will happen, but again, it wouldn't surprise me if we have that regime change, we have that transition. And that's our job as traders, is always to look forward and to, attempt to factor in, like what the market's doing, things that it knows or can anticipate. So we get the Fed's announcement. That's, it's out. The news is out. But what happens in the language? What happens in, the dot plot? What happens in some of the, statements that, or questions that come out, and then the answers, the responses during the testimony Q&A period? What comes out that might cause us to sell off? So if I was to say what this week could look like, it might be a bit of a wait and see, Monday, Tuesday, but still a little bit elevated. Wednesday, you might get a bit of a run, just expectations of the announcement. Then the announcement, it spikes around, maybe rallies, and then starts to sell off. And then Thursday we're down a lot, and then Friday we're down. That kind of action this week, I'm making a scenario that I think is quite plausible. And of course, it doesn't have to do that. But I think it's important as traders to run scenarios, and don't just run it one way, run it, a couple different ways, right? Another way would be, we start out down as everybody's concerned, like they look at the China thing and all that, and they're thinking the worst, and we sell off Monday, Tuesday, and then there's, everything goes well on Wednesday and we rally, so that's another scenario. So you have to build some cases for that, and if then statements, and how you're going to respond, right? So, a couple other things. So Macy's got a buyout, private equity. It's an offer to buy it out. So it represents I think a 17% premium over where it's trading right now. So 5.8 billion buyout bid. Sometimes these things that happen on the weekend and are announced can be bullish for the market. So that's a 20.76% premium from its closing price. So that could be bullish. On another merger news, Cigna's abandoning its pursuit of Humana. They're not going to go for anything there. It was a agreement to combine companies. I guess they failed to agree on the price, so that's dropping. Any other news that you see?
There's some earnings Monday. Oracle
Okay.
Wednesday, Adobe. And
Okay.
then,
Those are big names.
yeah,
Yeah.
Thursday, Costco.
Okay.
That's a
Big
big
name.
one.
Yeah.
And Friday, Darden Restaurants. So we can see how the consumer's holding up. Are they spending at restaurants? So
Okay. All right. Oh, and saw that news earlier. QR codes, they're so convenient.
yeah.
And everybody's like, oh, well, we'll just make QR codes now with, stuff. But apparently scammers are using QR codes to steal personal information.
Hmm.
That's interesting. All right. I think we've covered enough there. You guys have a good trading week, and fasten your seatbelts for the FOMC on Wednesday, and also expiration on Friday. And then position yourself to remember that we've talked about it before too. A lot of times there can be a change from the week of expiration to the following week. So if we did have a down week, it could set itself up for a bit of a comeback tour rally the following week after expiration's over. So just keep that in mind. We also have some S&P rebalancing on Friday. There's a lot of different things that get rebalanced quarterly. It's not as big as, of course, the Russell rebalance in June. It's just it's more global and lifestyle and S&P indices. Some of them are rebalanced. So anyway, fasten your seatbelts. Have a good week.
Good luck.
Thank you.